Hey traders and investors, it's Serge Berger here. Today we're going to have a look at the S&P 500. I received a lot of questions over the weekend where I stand on the S&P, on the S&P's reversal last week, Thursday, Friday, sort of bullish reversal. And basically, I remain of the same position I have been for some time, which is that so far, okay, so far, and this can certainly change, and in fact, it may change here very soon, but so far the dips continue to get bought. If you look at the S&P 500 here through this sort of 12, almost 12-month chart, you can see that yes, last Thursday we put in a low, intraday morning low, start reversing higher, and then on Friday saw fall through buying. So far, Monday morning, as I'm recording this, we just bumped into the 50-day moving average, which isn't all that important. What's more important is sort of the retracement that we're going to be seeing here from the September 19th top to last Thursday's low. And if you squint a little bit, you'll see that we're basically just now coming into about a 50% retracement of that move somewhere around the let's call it 1975 to about 1980. 85 area is sort of where I would expect if the Bears want to defend this, they're going to really need to sort of not get the S&P to be able to reclaim 1985 at the very latest. So the fact that it's also coincided with the 50-day is fine, but I certainly wouldn't put a ton of weight on that. So that's where I stand in terms of that. What's also important though is the real big picture, and that's where I continue to reiterate that basically if you look at this through a multi-year lens, this is a logarithmic chart of the S&P 500, you can see that we keep holding this support line. In fact, last Thursday the S&P bounced right off of that line. At the same time, to make things even more confusing though, you'll see that we have had a series of lower highs in the RSI index, and that of course at some point should technically weigh on the market. But again, until we've put in a lower high in the S&P, and again so far we have not done that, it's very difficult to argue to really go short this index blindly, so to speak. One last point here, and I think it's an important one. If we go on back to a monthly chart of the S&P 500, you'll note that the month of August, that's this bar here, was a so-called bullish outside bar. That through sort of, let's say, at least a multi-week, probably a multi-month view should be bullish. And if this outside week is any indication, then something like the 1900 area should be holding as support. In other words, the low end of August should be somewhat holding then as support. If that gives, then yes, 1850 is definitely in play. But until then, the dips continue to get bought, as I just showed you as of last week. And I know there's a lot of things to argue here to go short this market, at least the S&P. But I think having been short the Russell 2000 has been an easier trade per se. Also, it hasn't been that easy either. But that's where I stand. So you have this sort of confluence until we make a lower high in the S&P 500. I think it's very difficult to really short this market aggressively from that point of view. So I hope this makes sense. If you got any questions, as always, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.